2.5 minutes left in the trading day. You're looking at a mixed picture. S&P and Nasdaq in the red. Dow, though, holding on to gains up just 72 points. We want to bring in Megan Horniman. She's a director of portfolio strategy at Verdance Capital Advisors. We're also joined by Michael Antonelli with Baird. He is a market strategist there. Michael, first to you, just talking about the fact that we're not too far from those record highs here. The Dow on track for another record. Is investor sentiment too high at this point?
You know, I don't think so per se, because I think there's a lot of things out there that make me excited about the stock market in general. And I'm generally a bullish guy, but there are things out there that kind of overweigh the sentiment issue for me. Breadth keeps expanding. MSCI ACWI, which is kind of all the stock markets, 11 days of gains, most since 2004. You know, yields are rising. There's a lot out there that to me says that there's a reason why investors should be bullish. So in my opinion, no. You know, in general, and you know, if you look at just the market, I don't think investor sentiment is too frothy. There are probably sections of it that are, though.
All right, let's go to Jared Blickery. He is standing by to take us to the closing bell.
All right. Well, we got a mixed market, and the Dow is set for a record close. As Shauna just said, it's in the green for 23 basis points. S&P 500 down just slightly. Nasdaq off 1/3%. Russell 2000, the underperformer of the day, that's down 2/3%. You just take a look at what small caps have done over the trailing 5 days, and it's not a lot. Just kind of going sideways, very close to record highs, though. Let's take a look inside the Nasdaq 100, where we continue to see a mixed picture for the mega caps as well. Alphabet's in the green for 0.8%. Facebook up over 1%, but Apple's down over 1.5%. Tesla down 2.5%. Now, we've been watching the stock breaking under 800, and this is an important support line that we've seen hold for some time. So if it accelerates down through that, probably get some follow through. Now, taking a look at the sector action for the day, energy still the big leader, up 2.5%, followed by financial and communication services. Those are outperforming. And then to the downside, we got utilities, real estate, and healthcare, each off about 1%. Now, we got to check in Bitcoin one more time, still slightly in the green. We see a lot of red in the rest of the crypto space here. Bitcoin price just under 50,000 heading into the closing bell here, guys.
Okay. As they like to say when you're signing at the bank, sign on the dotted line, put a fork in it. We've got the day, and here's where we're going to settle at the closing bell. Looks like the S&P 500 is going to be down about 2 points. Dow's going to be up 61 points, and the Nasdaq's going to be up about 47 points. Some of the Dow components that did pretty well today, Salesforce, it was one of the big leaders. It was up about 3%. Also saw Caterpillar up about 2%. We talked about energy, and the energy sector was up. Well, Chevron, it was up about 2%. But I want to let you know that Boeing was up almost 3% today, and that's a perfect segue to bring back into the stream Megan, because you've talked about the pent-up demand specifically with travel and leisure, and we're starting to see the reservations get made. But are people still nervous about traveling before they get the vaccine, or is everyone expecting they're going to have it and let's go?
So I think right now you're seeing some of the consumer, I guess, confidence in travel around whether it's, TSA, travel throughput, that indicator, we've seen that steadily rise. So I think that we're looking for more as a second half of this year's story, when you really start to get the majority of the population vaccinated or get much closer to that herd immunity. And then you're also left with the fact that we've got that herd immunity, but we also have fiscal stimulus. And the fiscal stimulus is what Americans are going to use to go out and go spend on travel. It's not just travel, it's experience in general. It's getting out to the movies, it's going back out to dinner. I think that Americans have been stuck inside for long enough. I think that they're done with this, and I think that you're seeing that with some of the pushback which you're getting with some of the politicians in some of the states that have been very stringent on their restrictions.
Michael, I want to go back to something that you said earlier, and you were talking about yields rising, and you said it's a reason that investors should be bullish. I'm curious to get more of your thoughts on that, because we've heard time and time again here on this program that yields are rising a little bit too quickly, and that could actually be bad news here for equities in the short term.
Yeah, yields ends up being one of these things where everybody wants like the perfect temperature, whether it be rising or falling. Let's just set aside the fact that rapidly falling yields are usually a bad sign for equity markets. So let's set that aside. Where the way yields are rising now, have they come too far too fast? Well, at 125, 126, I personally don't think they have. I think there's still plenty of room for yields to rise. And also, I'm just an equity guy. I defer to the smart bond market, if you will. But I've always been told that we need yields to rise to confirm this kind of economic growth story. So we're getting that. And I'm taking that as a positive. Yields are very important right now. I don't think they've gone too far too fast. We got plenty of runway. Remember, we're leaning on the Fed. What is the Fed thinking? And right now, the Fed's got their gas pedal to the ground. So I'm going to be watching what the Fed governors say. When I get somebody on TV or Yahoo Finance saying that they're worried about yields from the Fed, then I'll start to perk up.
I don't think anyone's worried, but Megan, I'm curious because I think the 30-year is at the highest point it's been since January 2020. And, the 10-year, does anyone really think it's going to be over 1.5% when we head into 2022? What do you think, Megan?
Well, you have the Fed that's going to try and limit that from happening. But our view has always been if yields are rising for the right reasons, and your former guest mentioned that, yields are rising because we're getting out of emergency mode right now. Should we have been at 0.6% back in August? Probably not. We knew that we would get past this coronavirus, and what we would be left with is a significant amount of fiscal stimulus, a consumer with a very strong balance sheet, and we would start to repair the jobs market. So what I've seen with the interest rates and the rise in interest rates is really reflecting the fact that we have seen the rise in commodity prices. We are pointing to better economic growth in the second half of this year. And then the vaccine distribution has actually sped up. I know that there's been some speculation around when the vaccines first started, it was very slow. But if you look at the data, we're vaccinating nearly 11 million more Americans per week. So this has been a significant pickup than we saw just 6 weeks ago when we were only vaccinating about 2 million more Americans. So yields, I think, are rising for the right reasons. Now, people say this has been a big move higher, but really this has been going on since last August. So it's been more of a gradual move higher. If we spike significantly higher from here, remember the markets don't like it if yields move too far too fast. If we spike significantly higher from here, I think that could take some of the wind out of the sails of the equity market, but that's not necessarily something that the Fed wants, and they'll continue to come in and intervene in the market if they need to.
Michael, you mentioned that you're closely watching Fed policy. I'm curious just to get your thoughts on fiscal policy. We had that $1.9 trillion package that the Biden administration wants to push through. How are you looking at that and the importance here to the equity markets?
It's just another one of the things I mentioned earlier that make me optimistic, not only about the next few months, but certainly through the end of the year. When you talk about fiscal stimulus, it's being injected into a world where, again, rates are low, still relatively low. Mortgage rates are low. The housing market's on fire. We're vaccinating more people. It's another kind of gear that the car can move into to continue to go higher. I think we're going to see some sort of fiscal stimulus. I think it's important. Two things can be true. That the average American consumer is in a great shape financially with their balance sheet and with savings. But there are a group of people that are still struggling, that are still out of work or still struggling to get back to full employment. We need to continue to help that second group. Because if we do, and everything lines up, we're talking about a roaring 20s, and I'm just hoping we don't get prohibition to come back. But it's on the table. It's on the table. Fiscal stimulus is important to get us just over that final hurdle.
I think it's a safe bet to say prohibition is not coming back. Let's get the final word, though, from Jared Blickery.
All right. Well, guess what? I'm looking at the bond market, too. And let's look at a couple charts talking about the 10-year yield rising to roughly a 1-year high. And we have break-evens heading higher. We got the 10-year break-even at 2.24. Even real yields are heading higher above negative 1%. So the real yield is about negative 95 basis points. What does this mean for equities? Well, it signals that inflation could be around the corner. But don't tell that to Fed's Daily, because he's saying that, guess what? We don't have to worry about inflation. And people who worry about inflation could actually cause millions of other people to lose their jobs. So take that with a grain of salt. But I think we're going to be hearing a lot about this, especially in the back half of this year. You got the dollar heading lower and you got commodities surging. All of it points to cost push price inflation in the second half, guys.
All right, Jared Blickery, thanks so much. And our thanks to Megan Horniman, Director of Portfolio Strategy at Verdance Capital Advisors, and Michael Antonelli, with Baird. Thanks so much to you both for joining us today.